Hey everyone, it is Evan here from the Trade Risk on Tuesday, December 17th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump into our dashboard here. You can see it was a fairly quiet session today. All the major indices closing just slightly positive here, but pretty much flat. The Russell 2000 standing out just a bit here, up almost 0.5%, while everything else was flat. It kind of makes up for what we talked about in the previous weekend recap on Friday, that the Russell was showing a little bit of signs of kind of slowing down. You can see it a little bit here in the 5-day change numbers. So a good catch-up day for the Russell today. All in all, though, for the major indices, life continues to look great here for the bulls. We are extending to new all-time highs in most of these markets and individual stocks, and we are above all of these key simple moving averages, the 10, the 50, the 200-day in all the major indices. If we scroll down and take a look at sectors here, we can see semiconductors top of the list now, 5.5% over the past 5 days, followed by tech and energy. And on the downside, we have staples, we have biotech, and we have industrials, all positive, but underperforming their peers here. So if we look at major markets, we have Chinese markets at the top, followed by emerging markets and oil. And on the downside, we have volatility unwind, we have TLT, and we have IEF, which is the 10-year bonds. So let's jump into the charts here. Let's take a look at price action from starting with the S&P 500. This is a weekly picture that we're looking at here, and this is the cash settled market. So if we zoom in and take a look at just this week's candle here, you can see that we do have a push here to new all-time highs, basically an extension in this uptrend that has been in place for quite some time. If we clean this up from some of these lines on here, you can see we've just basically been floating higher here over the past 2.5 months. Very little volatility ever since breaking out over about 3,030, which is in the middle of October. And markets have been just basically floating higher since. We had a higher volatility week 2 weeks ago, but that clearly has been quickly left in the dust here as markets continue to elevate. So as we if we switch over to a daily chart, we take a look at the action a little bit closer here. The most recent breakout and surge to new highs came from last Thursday when we broke above this little kind of 2-week consolidation, this 2-week pullback that we saw. So this was the latest breakout level here. That's sort of the upper level line in the sand that I'd be using here to keep that upper level momentum intact here for the bull case. We'd want to see this market holding above, call it 3150, 3155 or so. We are trading certainly above it, certainly extended. Most metrics here are going to show that this market is quite extended to the upside, and it certainly is objectively by all measures. We could, assertively say that. However, that doesn't necessarily indicate that we have to stop here or that the market has to reverse, in the next day or two, because basically this market has been quite extended, really going back for the majority of this run ever since the beginning of November here. It has been pretty frothy, and it continues to extend. We continue to see some different rotational groups, from financials to semis, from semis taking a break for a little bit of energy now, and biotech. So this market is kind of rotating among sectors here and keeping the sort of the dance, the dream alive here as this moves to new highs. So that's sort of where we're at here. Not a whole lot of new information. We basically have no overhead supply. We're in an uptrend, and life looks pretty good for the bull case. Now, it doesn't mean we should be complacent. We do have to remember that, of course, we have covered a lot of ground. If we look at where the VIX is now, it's back to 12, which is basically the year-to-date lows and historically a below average reading. But that does sort of work or make sense with a low volatility kind of grinding up market. So let's be aware that things could change. A pullback is certainly due, and we should be if not mentally preparing for it, at least preparing the portfolio for it, whatever that means for your strategy. But for now, life looks good here for the bull case. The trend is up, so we can try and enjoy that ride to the upside. So that is the S&P 500. If we look at the Russell 2000 here, you can see that it had been slowing down over the past 3 days, or really just kind of taking a break, kind of just seeing a little bit of consolidation here, mostly through time. You can see with today's close back up towards this resistance here, it does look like it has the potential here and the look like it wants to potentially break out and help kind of or help move to the upside again, turn this into a continuation pattern. And again, if that's the case, then that speaks well, and again speaks to that rotational conversation we had just a moment ago, where we mentioned that this market is kind of just grinding higher and finding new setups throughout the universe of stocks. Small caps could be the next short-term wave here to keep this market bid strongly into the end of the year. If we go to the NASDAQ 100, you can see this also trading at all-time highs. Again, extended here on most metrics you could come up with and put on your chart, but what that basically translates to is, we're in a strong uptrend, and trends are up, momentum is up, so that is the path of least resistance. So that is the landscape there for the market environment. We're talking about over 27% higher now, or year-to-date gains for the S&P 500, just an absolute blockbuster year. NASDAQ over 30%, I think 32% for the composite now, year-to-date for 2019. So some real impressive results. Now let's get into some other markets. If we go to TLT next here, you can see on the week is down here 1%. Still, when we look here at this weekly picture, you can see we just really got this big consolidation that's still taking place. In fact, it looks pretty healthy here from a structural technical basis on this weekly time frame. We had a very strong year for bonds as well this year, and we can see that we're cooling off. We're kind of consolidating this big run up from the first half of the year here, underneath or around this 138 level. So it is still tightening. It is still consolidating here, still waiting for that move to happen right now. Nothing new to speak of for TLT. If we look at GLD next, you can see pretty much the same thing here. On the weekly chart, this had an explosive, second and third quarter for the year in June, July, August, September. This really ignited to the upside here, launched from about 120 all the way up to 145 or so, and it's been pulling back in this channel, in this flag, in this consolidation ever since that point. So in the short term, nothing has changed here. Both TLT and gold are down to sideways to down, but in the longer term here, you can see that we get some pretty constructive consolidation. So things will, potentially look at into the new year. Maybe these will start to be ready for a bigger move, but for now, both gold, TLT look pretty similar. Silver also in that situation, got a slightly different look. I mean, this started a little bit later, but it definitely got frothy. It definitely had a strong run here in July and August, all the way up to 18. We've got a little more, kind of a steeper pullback going on here in silver, but kind of the same look where we're consolidating and, waiting for that move to happen maybe next year. Now, if we go to energy, we do have some things to talk about here with oil persisting to the upside here and then sort of accelerating through this upper trend line that has been kind of keeping a lid on this price advancement. We're starting to see an acceleration here to the upside. We're leaving behind some of this prior supply in here. So oil bulls continuing to work here in the short to intermediate term, and that momentum is picking up. Last but not least, if we look at natural gas, you can see this is still kind of hovering around year-to-date lows. This looks very different than all of the other charts we just looked at here. Natural gas trading, again, just under the or just at 2019 lows. We're really going to get above $18 or so. That's sort of my line in the sand that I've been using here to potentially look at at least some encouraging signs of at least a short-term bottom or maybe some type of bear trap here on this latest leg lower. We haven't reclaimed it. We tried to yesterday. We broke back below it. So again, a surge back over $18 would, I think, speak to some near-term, a near-term trade perhaps if you're very tactical. But for now, it's still, one of the strongest downtrends we can find out there in markets. So you got to be careful here in natural gas. So that's it. That's what we got for the midweek video. Not a lot to talk about in terms of new information for equities. We're just kind of grinding higher, low volatility environment. So not much to speak of there. Commodities, a little bit more of an action space there in some select spots, but you know, really the story is still just dominating equities for 2019. So that's it. Thanks so much as always for tuning in and watching. Every Tuesday, midweek market recap videos just like this. And you can follow us on the Trade Risk blog or on our YouTube channel. Have a great rest of your day, and we'll see you back here tomorrow for some trade ideas.